Welcome to another edition of your on-air series for the Citi Business Festival, which is brought to you by Absa Bank with support from MTN, IT Consortium, Gersal, and GIPC. My name is Bernard Avle. We are still talking about MSMEs, medium and small size industries, and this week we're looking at how they will recover from COVID. On this third, they want to examine the question of taxes. I'm told there are two certainties in life: death and taxes. We're very privileged to have the Deputy Managing Partner for Ali Nacha & Associates, Ismail Ibn Ibrahim, to join us to work through this. Ibrahim, welcome to the show.
Thank you very much, Bernard.
So you are the Deputy Managing Partner. Tell me about Ali Nacha & Associates. What do you guys do?
Ali Nacha & Associates is a law firm. We specialize particularly in tax law, but we provide other corporate legal services and then general legal services as well.
I was told that of all the courses law people do, tax is very hard. Some of my mates in law school said the tax part of law. So you're a tax lawyer?
Yes, I am a tax lawyer.
What, is tax law as hard as people make it seem?
It's a bit technical. Given the fact that I've been in it for a while, I wouldn't say it's as hard as people see it. And I decided to do tax law because of Ali Nacha. He was my lecturer in school and he made it really fun. So right after law school, I decided to enter tax law and started practicing.
I know a lot of companies are very concerned about tax, so they will definitely not take their taxes for granted. But for SMEs, how big is the tax question for a small company? So I start my own pineapple mixture company or my shito company. Is it a kind of enterprise that I should start thinking about tax? So at what point does tax become part of the conversation for small businesses?
I mean, not just small businesses, but for everyone. Tax must immediately become part of the conversation because the GRA or the state, whether or not you like it, is a de facto shareholder in your business. Or let me put it, a by force shareholder. And whether or not you make, when you make profits, whether or not you declare dividends, they will share in your profit. And mind you, financial accounting is way different from tax accounting. So whilst you might be making losses in financial accounting, you might be making a profit in tax accounting, and still GRA comes to collect its share. And so depending on how you manage your affairs, if you do not take time, they'll be having a larger chunk of your profits if you are not compliant with the tax law. So it's imperative that every business, no matter how small, once you start, you focus on your taxes and deal with it. Otherwise,
can you elaborate on the point you made? That you said financial accounting is different from tax accounting.
Yes.
Because I've just looking through some company reports, and all the like banks, they're all saying they made profit.
Yeah.
Now, quite a number of them made profit before tax. A lot of them made profit before tax. Some still made profit after tax. When you say there's tax accounting and financial accounting, can you elaborate on that?
So I'll give you a typical point of difference. For example, depreciation. A company might have its depreciation policy, which allows it to depreciate at a certain rate. But when you come to tax law, depreciation is specifically provided in the law. And so you must stick to that. And then we do not give deduction for depreciation. We give deduction for what we call capital allowance. Another point is in deductible expenses. For example, you do your repairs, you might want to deduct all of it in financial accounting. But when you come to tax accounting, because of the tax law, there is a limit to what you can deduct. So you have to be cautious that what you're doing financially should correspond with what is happening in tax law. Otherwise, you might be making profits. And
so people are more creative when it comes to profit. I remember when I was in business school, the lecturer used to say cash is king.
Yeah.
Because depending on how we feel, we can say we made a profit.
Exactly.
But cash is the main barometer of a company's health. That's what he said, and I think he explained that. Is that the kind of thing you're saying in terms of even the differences again? So that when it comes to tax, what the tax person is looking for is not based on what I want to do gross profit, you want to do operating profit. Basically, they have a certain number they are looking for. Once they see that, or once they see that ratio, they are going to tax you.
Yeah, exactly. I mean, if you are looking at deductions, because tax law is specific with what you can deduct. For example, there's this expression that you can only deduct what is wholly, exclusively, and necessarily incurred. Bernard, if you are doing your business, you might say that I took person A to a restaurant and I incurred so much, so I'm deducting it. But the taxman would ask you whether it is necessary for you to incur that expense, for example, in your legal practice. If it's not the case, it might not be deductible. And there's a practice where businesses might have a separate financial statement for the banks, and they have a different one for the taxman. Because they want the banks to see that they are financially liquid, they might do the right thing over there, increase the amount. But because it will be a different consequence with the taxman, they'll reduce what they are earning. So there's actually a difference between financial accounting and then tax accounting.
So in that respect, people who own companies, what law must they start reading to acquaint themselves? Because you keep making reference to the law.
Yeah.
So when it comes to tax accounting, it's the law.
It's the law.
So it's not based on the method you were taught, whether you were taught in the German school or the British school. So which laws come to mind when we talk about tax?
The first law you have to look at is the Income Tax Act, 2015 Act 896. If you are registered under VAT, you must look at the Value Added Tax Act 2013, Act 870. These laws also have their regulations. We have the LI 2244 for income tax regulations. We have the LI 2243 for VAT regulations. And then there is also the Revenue Administration Act, which is the act that administers all the taxes. That's where you have the offenses, the penalties, the time for filing your tax and all that. So these are the three main laws you have to look at. There are other laws depending on what you do, the Customs Act, the Excise Tax Act, and what have you.
But these are the three
But
main
the three
laws,
main ones should be the
ones you should look out for. So when we talk about small and medium-sized organizations, from off the top of your head, what are their main tax obligations? So maybe I'll give an example. I produce shito. I like the shito example.
Yeah.
I make shito, I package it, I sell it in these filling stations. I'm thinking of exporting, but I'm not yet there.
Yeah.
For a busy business like that, I produce all my raw materials from here. Maybe I import the glass from someplace. What would typically be my tax obligations?
So, unfortunately, we do not particularly have tailor-made tax obligations for SMEs. The tax obligations run across. The main thing you have to look out for is filing your income tax returns. And then there's a self-estimate return. I'll explain these things. You have to look out for withholding tax and withholding tax returns. And again, if you're registrable under VAT, you have to look out for filing your VAT returns. So in terms of the income tax return, this is when you have completed the year, what we call the basis period. And then you want to tell the GRA, this is how much I made, these are my expenses, this is my what we call the chargeable income after deducting your expenses. And so I'm supposed to pay so much tax. You usually file the tax return around April of the next year. So for example, for 2022, you have to look out to be able to file your tax return by April of 2023. Now the self-estimate assessment or self-assessment estimate is where at the beginning of the year, say by March, you tell the GRA, this is how much I anticipate making in the year. And this is how much my taxes is going to be. And so you are going to pay on a quarterly basis. That is what we call the self-estimate assessment. You have the opportunity to revise this along the line. But if you are looking at what's it called? Businesses or micro enterprises, there's what we call the tax stamp, where they have an amount they have to pay on a quarterly basis. But even with a micro enterprise, we are talking about barbers, hairdressers, what have you. The law says that the tax they pay on a quarterly basis is on account. And so they still have the responsibility to file their tax returns. That's why I say we do not particularly have any tailor-made tax obligations for SMEs. It cuts across board.
So when you said the company must pay income tax, this is the corporate income.
Corporate income
not
tax.
Personal income. So what if in the example I give, I work with 3 people. So I am the CEO, and then I have a sales girl, and then I have 2 people who help me with transportation, and I pay them salaries. Who does the filing of what? So I've done the income tax for the whole company. Do I also need to do PAYE for them?
Yes, PAYE, that's under withholding tax, is one of the responsibilities of employers. You have the obligation to withhold taxes from their salaries and then pay to the Revenue Authority. Now, there's a slight twist here. When Act 896 was introduced, an employee did not have to file his returns if their only source of income was from employment. But there was an amendment where that was taken out, which technically means now even employees have to file their returns. So after your employer has filed your PAYE return, you still have the obligation to go and file your personal income tax. The practical difficulty with this, and I usually ask, even in the GRA, is it the case that every single employee of GRA is filing their personal income tax. That's the practical difficulty. But as far as the law is concerned, now even employees have the responsibility to file their returns after their PAYE has been filed for them.
Even if your company is paying you 5,000 cedis and they file that based on your TIN, if you earn another 1,000 from other activities, the law enjoins you to. But that's interesting because some companies file group.
Yes.
So maybe you have 60 employees. You sort of pay them their salary and then you jointly send their tax thing and then the GRA distinguishes from that.
Yeah.
So now if you're an individual within that 60, how are you going to set up for yourself? It's a bit complicated, isn't it?
You see, ideally, when an employer withholds taxes from you, it's their responsibility to give you a withholding tax certificate.
Good.
This is another thing that practically employers are not doing. So if Bernard is employed by me and I give him a withholding tax certificate for every month that I'm withholding from him. At the end of the year, when we enter April, he can go and file his own returns, especially if he has other income from other sources. Now, that was the basis on which the law said that if an employee's only source of income was from employment, they didn't have to file returns. But if they had other sources of income, then they have to file returns. But that was taken out. And so whether or not you have other sources of income, you still have to file your tax returns.
Wow. So you've spoken about the S company, the law not distinguishing between a small business and large business. So you file your corporate income and then you file the returns for your
Employees.
What about VAT? Does it depend on what kind of business you're in?
VAT depends on a threshold. There's a threshold for 200,000 cedis that if you reach within the course of the year, you have to register and file the tax. If you are making, say, 50,000 in a quarter, or say you anticipate in the next 9 months you're going to make the 200,000 Ghana cedi, then you have to register for VAT. So we have what we call the taxable suppliers, and literally most suppliers are taxable suppliers, unless you are exempt or you are providing a zero-rated service. Even the zero-rated service, it doesn't mean you're exempt. It means you are charging VAT at 0%, but you still have to file the return. So if you're a small business which reaches a threshold, you have the obligation to file. There's also the voluntary registration, because you might have big businesses asking you, where is your VAT? So if you voluntarily wish to register for VAT, you can also register for the VAT. But you cannot deregister unless after 2 years, once you register.
So VAT is based on threshold.
Yeah.
So that suggests that even companies that are supposed to be SMEs, on the definition of threshold, a lot of them will qualify to
yes, they will qualify. If you are looking at especially the medium enterprises, for example, before the restructuring of GRA, they had a medium tax office which took care of companies with turnover from around 90,000 to 5 million Ghana cedis. So most medium enterprises are going to be.
So there are very few companies that would not charge VAT.
Yes, very few.
Maybe like a small barber shop or something.
Exactly.
The rest. But what about records though? So if I'm a company, how do I know even how much I earn? Some companies don't know. Maybe I have a barber in Taifa. Is it how? Maybe you can tell me how you help them know. Because if the tax official comes to my barber shop and I say, oh, me, I'm a small shop, I don't earn up to 200,000 in a year, and they want to check, how will they find out?
I mean, if you are looking at the typical barber, not the dadaba kind of barbering shops, which are making huge sums of money, the typical barber or hairdresser is subject to the tax stamp.
Okay.
Where you have a allocated amount that you have to pay every quarter. And it's because they have the trouble of gathering records and what have you. But even then, they are not relieved from filing tax returns. So for a typical barber, you can have your cash book where you are writing how much you make and all of that. I mean, record keeping is a bane of our economy because we have a largely informal market. And so I can understand the practical difficulty, especially with micro businesses. But for small and medium enterprises, they should be able to get someone to help them with their records.
This is the Citi Business Festival. We're talking about revamping or reviving your SME post-COVID. And we're looking at the tax angle. So far, my guest, who is in the person of Ismail Ibn Ibrahim, has been explaining to us the basic issues around taxes, distinguishing between the financial accounting and tax accounting. He talks about the importance of the three main laws, also discusses the tax threshold. When we come back, we'll ask him some practical tips about how small businesses can manage their tax liabilities in a way that doesn't emasculate the business. He will also explain the difference between tax evasion and tax avoidance. It's a very big topic globally. He will explain that for us and then help us with practical ways we can deal with the revenue authorities in order to be a law-abiding business, but at the same time, not cutting your nose to spite your face. Stay with us. Welcome back. This is the Citi Business Festival. We are in our second week. We're discussing how SMEs can recover post-COVID. My guest is Ismail Ibn Ibrahim. He is the Deputy Managing Partner for Ali Nachi & Associates, their tax consulting firm. He's given us all the insights into taxes for your SME. So you've said the government doesn't distinguish between size of business, except of course the tax stamp versus the main laws. So I think one of the key things people complain to me about is actually the taxes are too many. And they want a way of managing their tax. Of course, within a legal way.
Yeah.
So are there any general tips you can give to companies, small businesses, in how to manage their tax obligations in a way that does not necessarily destroy their cash flow?
Okay. In terms of managing so that your cash flow is not affected, the first point will be your self-estimate assessment or self-assessment estimate. Now, as I explained earlier, this is a situation where you are telling the GRA how much you anticipate you make in the year and how much taxes you're supposed to pay. So, for example, if you anticipate you make 1,000 cedis in the year and your tax liability, just for example, would be around 200 cedis, you could reduce your estimation because you need time value of money. You could reduce your tax estimation to say 150 cedis so that you have extra 50. Because there's the opportunity for you to review your assessment in the course of the year. In the course of the year, you make sure that you review the assessment to what it's supposed to be, or any extra you make, you review it to that effect. Now, the point here to note is not to overly underestimate, because there's a penalty for underestimating tax less than 90% of what you actually owe. And so you have to make sure that if you reduce your estimation along the line, you review it to the right amount. The other thing I can say is that you take advantage of the opportunity to apply for extensions. Now you're supposed to file your return and pay the tax at the time you're filing your return. If you anticipate you'll not be able to have the money to pay the taxes, you can apply to the Commissioner General for an extension of time within which to pay your tax or to file your return. These are ways that can help you. If you're a very compliant taxpayer, there's the opportunity for you to apply for exemption from withholding tax. Now, withholding tax is when you are paying for a service and then they withhold a tax in advance from you. And so if you do not want to be suffering the withholding, that is people withholding from you, you can apply for an exemption from withholding tax. That allows you some cash flow. And then the last thing is the general point, which is about tax planning. Arranging your affairs in such a manner that you are not overly paying taxes. It's your opportunity, it's your responsibility to pay tax, but you do not have a duty to pay a tip on the tax. So you make sure you arrange your affairs in such a way that you are not overly paying tax. And let me say this, the first point in tax planning is tax compliance. Because you do not want to be mocked with penalties and interest for failure to comply with the tax law. So that's the first point of tax planning. And then the other areas will be taking advantage of the incentives and the...
But you said something about the estimate. Who determines it? Is it a discretionary issue?
So it's the opportunity for you to self-assess. So in the beginning of the year, I'm going to make 20,000 Ghana cedis based on what I've done previously. Now, mind you, the commissioner has the right to review your assessment.
Hey.
But largely,
Commissioner is powerful.
this opportunity is given for you to self-assess. And let me just put this in. When it comes to tax administration, the authority relies heavily on voluntary compliance. So it's up to the individuals, the taxpayers, the companies to voluntarily comply with the tax law, which helps the state. So that's why you are given the opportunity to self-assess and determine how much tax you're supposed to pay. When the year comes to the end, then you can file your returns and state how much you actually made. But this can be audited anyway. So,
is there anything like a tax holiday or tax window for startups in our law? I think there was some suggestion in the budget about something like that. Is there anything like that where if I start a company in the first few years, I'm tax exempt?
Yeah, there are what we call the tax concessions or concessionary periods. So these are mainly for farming industries. The specific details, for example, farming tree crops, you have 10 years from the beginning where you pay 1% tax. If you are into livestock, apart from cattle and fish, it's 5 years. If you're into cattle farming, you have 10 years and you're paying 1% tax. If you're into agro processing, I think it's around 5 years or 10 years from the beginning. And there's also an incentive for young entrepreneurs. Young entrepreneurs are people below the age of 35 years. So for young entrepreneurs, you have a breather of 5 years where you're not paying tax. And after that, you might be paying tax at 15% or 12.5%, depending on the location of your business. So these are some of the incentives that you could take advantage of.
You're talking about writing to the Commissioner General for deferment. Yes. Under what conditions will he say yes? So what I can't just say, Honorable Amishadai, I'm hustling, so give me a deferment. How does he exercise the discretion to say yes to me? Having written and said whatever, what does he look out for?
I mean, from my experience, it's usually based on your past records, how compliant you've been, and then if you have a reasonable excuse as to why you cannot file your tax at a particular point in time. Now, the biggest challenge of some businesses is when they have their audited financial statement. Sometimes it's delayed, it's protracted, so that by the time you're supposed to file your returns, it's not ready. This is a reasonable excuse why you are not able to file your returns. But other than that, you cannot wake up one day and say, I don't feel like filing my returns, let me ask for an extension. You have to have something reasonable to show why you cannot file.
Or maybe your business is not doing well, and you're having,
for example,
or your debtors are not, you owe people, or people maybe owe you, they are not paying.
Or depending on the nature of your business, let's say you're a self-employed person, you are out of the country, you're unable to put things together to file your return or pay your tax, you could write a letter. But this power is granted reservedly. They really make sure that you have a reasonable excuse to be given this opportunity.
I was talking to some business owner who said she was frustrated because, and this is VAT, she's saying that people have she supplied things to people and people have not paid, yet GRA says she owes, so she has to pay. And she's basically saying, well, the person hasn't brought the money to me, so why do I owe? And apparently that's the law. I don't know if you can explain that.
Yeah, so that's one of the practical difficulties when it comes to VAT. I have always explained to businesses, for example, you supply something worth 200,000 Ghana cedis. The person is paying you in 7 or 6 installments, but you issue an invoice for 200,000 Ghana cedis. You owe the tax immediately.
Immediately at once?
Yes, because you have issued the invoice. And so what is practical to do is that if the person is paying in installments, then you issue the invoice according to how much is being paid.
That may be the sensible thing to do.
Yes. Once you issue the invoice, the tax is due and you are supposed to pay it by the next month, the last day of the next month. And so what's your excuse? You've issued the invoice.
That's interesting. So if a way of legally getting around that is to issue the invoice on the basis of the payment plan.
Yes. So you come to pay me, I give you an invoice. Otherwise, you might be shooting yourself in the foot, and it doesn't make business sense for you not to get the money or not to have the money, and you would have issued the invoice for the whole amount. So if you have enough cash, you can take the responsibility. Let me issue the invoice. I'll pay the output. The person will come and pay me. But if you're not in the position to pay the output out front, then it's better that you issue the invoice based on what is given to you.
This is very interesting, and I'm sure there are a lot of people who are concerned about this. The other issue that has come up is the calculation of the VAT flat rate scheme thing. So again, can you explain? Apparently it was 4%, and then we are told now it's 19.125. I don't know if you can explain what's going on there.
So there's a standard VAT, and then there is a flat rate.
Okay.
The standard VAT is where you are looking at the 12.5% VAT component itself, the NHIL and GET fund of 2.5 each, and then the COVID levy of 1%, which technically gives you around 19.25. So whilst maybe the politicians might be saying VAT is still 17.5%, technically you are paying 19.25%, which makes it go higher and causes an increase in prices. And then there's a flat rate, which is at 3% plus your COVID levy of 1%. The flat rate applies to importers and retailers and wholesalers. But now they've brought a threshold of 200,000 where you would be applying the flat rate so that they are not unnecessarily worrying businesses. Yeah.
So has that brought more people into the tax net? Because I hear more companies are complaining.
See, my personal challenge, and this is not the opinion of my firm or anything, my personal challenge is that we've always discussed widening the tax net, but what we are doing is deepening the tax net. The same people who are paying are suffering more and more. Bernard, I'll give you this example. When it's time for elections, you can get people to go to all the nooks and crannies, all the corners in the country to get people to register to vote. If we make the effort to go to every corner of our country for informal businesses to register for the VAT, we'll be raking in more.
And the wider we go, the more we make.
The more we make.
Because if you go deep on 100 and you go wide on 1,000, you're probably going to earn more going wide on the 1,000 than going deep on the 100. So with all these changes, the tax compliant guys are getting more taxed.
Yes.
But the non-compliant are still getting away.
For example, there is the modified taxation in the second schedule of the Act, which you find the presumptive taxation. So for businesses that are making around 20,000 to 200,000, there's a 3% income tax on your revenue. This has been in the Act since 2015. I don't know when it's going to be applied.
It's not yet been applied.
It's not yet been applied.
Amazing stuff. So, as a way of going forward, just reiterate the tips for your tax planning for small business. You mentioned some key points I wanted to highlight again. You said, I think, number one, make sure you're tax compliant. Make sure you're paying.
Yes.
Make sure you're registered. And then you said a few other things.
So the first one, be tax compliant. The second thing, when it comes to filing your self-estimate, you can slightly reduce it so that you have use of your money, and then along the line you review it. And then you can take advantage of the incentives in the Act. So for self-employed peoples especially, there are the personal tax reliefs, dependent spouse, 1,000 cedis. For every child that you are taking to school, you have 600 per child, up to 3 children, all these things. A young entrepreneur can take advantage of the incentive in the Act, which allows you a concessionary period of 5 years. There's also the concessionary period for farming industries and what have you. And then the expenses, deductible expenses. You take advantage of the capital allowance provisions, deduction of repairs and maintenance and what have you. Those are within the confines of the law. But to the extreme, some of us could come in and help you with some tax planning.
There are lots of small businesses which have not registered to pay tax. I remember when the e-levy team was doing their education, they were saying if you make a payment to a tax-paying entity on some of the platforms, it is e-levy exempt. So they're trying to encourage these companies to register with the Registrar General, register with the what do you call it, the GRA, so that people can be exempt. I just don't know what you think for small businesses. At what point should they register to be taxed? Because I know a lot of them who still don't want to get known. I'll give an example. So sometimes I go and buy something from a shop. The barber I go to, I can pay with the *170#. He's a registered merchant. So I'm sure he pays tax because he's registered as a business. And I think you cannot register as a business if you don't have some record. But there's some shop I go to buy food. When I have to pay Momo, they don't give me the *170. They just say pay to my Momo number. So the barber, I pay *170# as a merchant. But this shop, they just say, oh, send to my Momo and add charges. They still haven't registered as a merchant, which I find is interesting. And this company makes more money than the barber.
You know, the thing with our system is that there is not proper communication between the institutions. For example, there's a difference between registering your company and registering with the GRA.
Okay.
There are companies that are not in the books of the Registrar General, but they still pay tax because GRA knows them.
Okay.
A lot of businesses do not want to be known because once you step your foot into the water, you are caught for life. They will always come after you. In tree, they say, oh, don't start to abbreviate anymore. Obedi. So that's why a lot of people do not want to go to the tax office to register, because once they get to know you, they will always come.
But then the GRA should find a way of making it easy, and also for being more lenient. Because if I am paying tax for 6 years and this year I'm hot, and someone is not paying tax for the past 6 years, they seem to be prosecuting me, the guy paying for the past 5 years, who is defaulting 1 year, and the guy who's not been paying for 6 years, nobody still knows him.
Exactly. I think we have to, my little advice is that we have to move from the point where we have a more prosecutorial point of view towards the taxation to more of like a business situation, because see the taxpayer as your customer. How would you treat your customer? I mean, for the recalcitrant ones, definitely they have to deal with them. But for those who are paying tax, for example, I have a client who has been paying tax all these years, and then they have an issue just in an audit they did for 2019. Their accounts were garnished.
Just like that?
Just like that. I mean, the audit report is there, you've objected, they get an escalation letter, and then the next thing you see, the account is garnished.
Wow.
So these are some of the instances where you might look at the history of the person and say, oh, this is a compliant person. Let me be a bit relaxed with them, rather than the recalcitrant ones who definitely have to be prosecuted. There's
a lot to learn from the conversation. Thank you very much. Ismail Ibn Ibrahim is the deputy managing partner for Ali Nacha and Associates. They are tax consultants, legal tax or tax law consultants. I'm sure you also have an accounting side, which is like a sister organization. Thank you for your insights. So that's all we have time for today's edition. Is brought to you by Absa Bank, MTN, IT Consortium, GIPC, and Gersal. We'll see you next time. Bye-bye.